Yeah, it is, Brian. Thankfully, we own the stock. But we still would buy any weakness. After the last report, despite how good it was, top and bottom, the stock pulled back, offering a nice entry point. If that happens again tonight, I think the stock is a buy. I mean, the reality is this stock is trading 18 times forward earnings, set to grow those EPS by 50%. Company has no debt. So the reality is that we viewed potentially as a headwind with these feed prices, with the commodities, could actually be a tailwind now that softs and commodities are coming in. So again, any weakness here in the post market, maybe an opportunity tomorrow to add shares.
Okay, the egg segment is over. Easy. All right, next up is Paychex. Shares the payroll company being laid off by investors, down 36% or 16% rather. And while results did come in better than expected and guidance was in line last quarter, analysts obviously concerned about the impact on inflation and margins and whether client retention was sustainable. Dom, I got to imagine, it's pretty simple. If you think the job market's going to slow down, you sell shares of payroll companies.
I mean, for Paychex, it really is, Sully, to your point, about anything macroeconomic, right? Anything about the macroeconomy, we can glean it all from one of the biggest payroll processors in America. So the number of paychecks it cuts for companies can maybe tell us a little bit more about the strength of the labor market overall, whether a possible soft landing for the economy in the face of a Fed interest rate tightening cycle is actually in or possible in the cards. It's also a good lens to look at the health of the small and medium-sized businesses, because it payroll processes or human resource manages many of those types of companies. One thing to watch for will be any of those metrics tied around maybe how much money it makes off of each of its clients, the revenue per client, and whether that growth is on track there. Now, as for the stock, this has been up 4 out of the last 5 quarterly reports, and the shares have been higher. But it was the most recent quarter, again, to your point, Brian, where the stock did fall despite some of that more kind of inline guidance.
Quint, any kind of a counter trend trade here on Paychex?
None at all. In fact, this is a tough one for me. Well, it's not that tough, but I love the company. I'm originally from Rochester, New York, so I love the company, but I don't like the stock here. Obviously, you alluded to it, common sense. If we see jobs grow slow and unemployment pick up, this is not good for a payroll company, but it's also not cheap. It's trading 25 times forward, set to grow those EPS only 7%. Look, it's got a good balance sheet, a solid dividend, but it's just not the trend play that we want here. We're a seller of the name.
Okay, yeah, Marty Mucci up there in Rochester. All right, finally, Thor Industries. They make great big RVs and camping trailers. Now, Thor shares hammered, down 31% this year. RVs, of course, saw a pandemic boom. Everybody got on the road. But now, Dom, you got sky-high borrowing costs. I mean, an 8% loan on a $300,000 RV is a lot of money.
It's like a mortgage. It pretty much is a mortgage for many Americans out there. But RVing has been a big thing, right, over the past several years. Demand for those recreational vehicles really into overdrive during the pandemic, to your point. All of that being said, I mean, that desire to travel outdoors without having to get on a plane, train, or boat, it drove many customers towards those campers and towables. So the comparables are tough, right? A lot of that demand is already there. Can you replicate it? I mean, these are the brand names, the ones that you know, Airstream, Jayco, Heartland. I mean, the picture there from a brand perspective is huge. But is the demand picture still robust? And how has the cost of fuel, by the way, affected its business? I mean, driving a motorhome or towing a camper with your truck isn't the most fuel-efficient way to travel. So what was the effect of higher fuel costs going into the summer and now lower fuel costs since then? And by the way, what's the outlook for fuel also? And by the way, other manufacturers like them are facing labor issues as well, also parts availability. So supply chain labor, a big factor here, Bri, as well.
Absolutely. Thor Industries. I mean, this is the perfect pandemic type trade, Quint, is it not? I mean, Pelotons
for sure,
and camping trailers.
It did great. It did great during the pandemic. And as you said, I mean, 30% this year, 50% off of the 2021 highs. I'm going to take a variant view here and say this one's a buy. It kind of checks all the value boxes for us. I mean, this thing is trading 7 times forward. It's trading 0.24 times sales. It is not rich, not even close. It's got a solid balance sheet, which I was actually pretty surprised to see, considering the industry that it's in. And this is interesting. They recently made a pretty decent investment in a company called Dragonfly that is involved in the lithium battery production for the RV space. So they're getting involved in sort of that EV model for RVs. They've got the, again, as I alluded to, the healthy balance sheet, solid dividend. I'm going to take this other side here and say this is a buy here.
0.24 times sales. I got to tell you, though, a 38-foot battery-operated RV, what would that weigh? Like 50,000 pounds? We'll see.
A lot.
Yeah, how about that? A lot is the answer. Quint Tatro, Dom Chu, Mr. Airstream himself. It's a very fine trailer. Thanks, guys.